Please allow me to introduce my panel, and I'll quickly do this introduction. My first panelist is the Managing Director for ANZ India. He runs the Global Capability Center with specific focus on AI, ML, and RPA, which is fascinating. 35 years in the industry. Venki, it's a pleasure to have you on stage. My second panelist for the day is the Chief Digital Officer of a 100-year-old bank. He would like to actually, define that he is driving a startup at 100, which is fascinating. And his profile says, I am accelerating the bank's pursuit of transformation to emerge as a strong, relevant, progressive, vibrant, digital bank of the future. Aren't you curious enough to know more about what he's doing? I am. So I'm going to invite Pankaj Gupta on stage. Pankaj. Oil is money. Don't you agree? Oil is money, right? Big money. And data is the new oil. Oil is money and data is the new oil. I have somebody who has dealt with all the three. He dealt with oil. He used to work for Shell. He used to deal a lot with data, and he used to work for a lot of IT firms, including Wipro, IBM. And obviously, he deals a lot with money, which is banking, first with Standard Chartered and DBS Bank, and now the head of technology, GRC, and TMO at Mashrak Bank. Please put your hands together to welcome Ganeshan Ramani. Well, with these panelists is me, Ram, senior partner at Cedar. I'll do my best to keep you engaged, but please do cooperate and do have some interesting questions to the panel, even if not to me. Yep. Brilliant. Thank you again for being here in this panel. I'll probably start
on the lighter side.
Please.
You are challenged by the chef. We are challenged by you. You have already covered all what we wanted to say.
All right. I'm going to actually, since you put that to Pankaj, I'm going to start with you, right? We talked about FinTech ecosystem, and I think there's a lot of FinTechs here in the room. Now, there is so much to cover, and there is so much to do when it comes to FinTech collaboration. And driving a digital agenda means you have to collaborate, and you can't do this alone, right? So if you have to give some perspective on what elements of this collaboration are the most critical, and what would you think, is, let's say, the critical success factor of that collaboration, what would you say?
Okay, so just a quick background also to this. You anyway said that, it is very obvious that now is the era of collaboration, correct? And we just go back a little bit in terms of understanding where do regulated entities start and where do FinTechs start. Regulated entities, frankly, and I had been a, IT services guy joining the bank, and it came very starkly to me that regulated entities start from a compliance standpoint, whereas FinTechs start from a customer standpoint, and convergence is happening, right? The biggest risk which we see when we partner with FinTechs is finally compliance, customer information, etc. is all the prerogative of the bank or the regulated entity to handle. How do you handle that? So I'm just kind of calling out some of the things which are key success factors, because if this is clear, I think there's no end to collaboration, because it is a given that, and I'll also share some personal experiences. When we partner with FinTechs, we get a huge push in terms of modernizing our own backends, modernizing our own processes, it actually helps us run faster and become better. So that's a great thing for the bank to do. And one of the other risks, which I won't call it a risk, but this question of who owns the customer, it really depends on what kind of fintech we are partnering. There are fintechs who have NBFCs, who have aspirations of being bankers also at some point of time. But one thing which has really changed is this entire monetization cycle of any innovation, even in the fintech or even in the banking industry. Every 2-3 years, I think we have only 3 years to really bring it to production scale, monetize, because there's a new wave which is coming in terms of either a regulatory innovation or a technology innovation. So how we have sorted it out is whenever we partner with a fintech, we don't get into who is owning the customer, who is not owning the customer. We kind of look at what kind of complementing products we can build together to fulfill beyond what we are trying to do at the start point of the journey. So if these three things are there, the regulatory framework in terms of compliances, the tech innovation and the customer centricity, and third thing is the collaborative sphere is not limited to the start point, but the discovery is there so that there's win for both the partners. So these three things I think are important points from a success standpoint of FinTechs.
Very interesting. And I think your first comment about the focus from or the starting point of compliance, and so you're always having that in the back of your mind, whereas fintechs don't necessarily have that, so I think that makes a big difference, so you don't jump at everything and you're being sensitive.
Now RBI is bringing out that SRO concept, so things will be a lot better. The other thing which also is happening is one more risk which is there from a bank standpoint is, sustainability of these fintechs. So, when there are innovators, great solutions, but what happens if you bring them to the core and, they really don't kind of make it after the next 2-3 years? Is about, but industry is gravitating towards that. It's an interesting phenomena that I think the era is now of consolidation. It is quite evident from the funding numbers that these numbers are coming down, and it is coming down not because innovation is not happening, because consolidation is happening. And as we consolidate, we'll find fintechs become big techs. More and more big techs will be getting formed. And over the next 7 or 8 years, I think, each one of them, that sustainability will automatically get sorted.
That's a good one. Every big tech today used to be a small tech sometime, right? So, yeah, good one. I'll take this to you, Venki, and I guess FinTech innovation, if I was to again go back to the comment that Pankaj made, it's not only about collaboration, but creating what could actually be doing relevant product or complementing what you do from a collaboration standpoint. And when you run a global capability center, which you are, and I guess 6,000 plus people operate in India, the scale in which you're operating and driving this actually takes its own context, because you are not addressing just one problem statement. You probably are doing it for the whole ecosystem of your parent firm around the world, right? So how has the GCC growth journey in the trajectory been, particularly in driving what one would call as the digital and fintech innovation journey? Yeah.
Sure. So before I start, thank you very much for having me here. And please don't let us down. You got to stay awake and you got to make us win, not the chef. Yeah?
Thank you.
So actually ANZ, I will relate it to a little bit of our past. We came into this country to set up the GCC in 1989. Not too many people know that we precede several big banks who have been around for a while. And that was work that they did not want to be done in the head office. So I don't want to do it here. Let's put it across 6,000 miles. Somebody will do it and send it to me. Right? So that was work which was not wanted to be done, but needed to be done. Right?
Dumping ground, basically.
Sorry? Dumping ground, yes. And this is true for everyone. And don't believe them if they say no, right? So it has taken us 20-25 years to actually get to a point where we are doing some serious value-added work that's coming through. So from that point of not wanting to do it, so let's give it to someone else, to a point where I think they can do a little bit more of decisioning to, they have developed enough commercial acumen to now actually look at serious business problems, and now there is a seat on the table for all GCCs to actually do some significant changes to the bank, right? So ideas that we make get counted. And largely all of that has been, we owe a lot to the Indian digital, fintech, big tech environment. I think there is no question about it. To get something so transformative to happen, few stars have to align. And in this case, what aligned was, of course, business problems exist. There is you need people who understand the end-to-end process of the business problem. It's a big tick for the GCCs. You need someone who is willing to change and adopt a new solution that might come through fintech. Imagine an Australian banking person who has spent 35 years in a bank or 40 years in a bank, asking them to change to a new system doesn't work. So if you want to test it, you have young 25, 27-year-olds here who don't care about what happens to their job next day because they know that they will get something else. So the environment is a big tick here. You know, that whole mentality of accepting, adopting, and reveling in chaos is a big thing. It's another big tick. Bring the fintech availability in India, availability of skillful, very extremely bright, talented people who are hungry for a business problem so that they can deploy their solution is a potent combination. Here are people who have developed some brilliant technology, tools, etc., but really lack a good business problem to get a total bite on to prove their technology. And banks can provide that, or any other GCC can provide that. So when you have these three big things combined with what you told us, if it works in India, it will work elsewhere, I think it's a very potent combination. And that led to this inevitable transformation of GCCs moving from being transaction process or technology application development and support folks to someone who drives serious innovation. All right? So it's a combination of things that have happened. GCC have transitioned this path very well. At various stages, people are at various stages, and this is only going to accelerate. If an Australian bank can look at their GCC today and say that you drive the innovation for us, things must be changing, because you know how regularly insular Australia is. Yeah? So I think we see a very, very big change. We see a part that we can play as GCC in the bank's future digital sort of adventure.
I mean, my most interesting takeaway from what you just said, Venki, is we are used to having people who have a problem and looking out for solutions. And the fintechs here have the solution looking for a problem. That's that's a deadly one, yeah. And just as quick follow-on to that, in terms of adoption and embracing, let's say, experimentation to drive the innovation, do you see that happening easily with GCCs as compared to the conventional banks as they are, or is there a difference?
So there are two things here. One is banks in general are very slow to adopt. I think that's changing. So you see really big banks who have been very stodgy all these years, now suddenly realizing that they need to start at least doing some POCs, POVs, and then figure out if it works or not. So I think that is a change by itself. But what's accelerating that is this GCC folks, because remember, it's all about, after all, the people who are doing the job. And here you have very smart, bright graduates coming in to do some seriously basic work initially. Let's accept it, right? Banking is very simple business. So if you get in a postgraduate to come in and do a home loan process, which is quite simple and basic, the GCC staff nature by nature, they are looking at simplification of their work. They are not looking at probably doing something for the customer, but they're saying, why am I doing this, drawing a list every time and indexing 1,000 stuff? Let me write a small macro and do it. And if you fan it well, that can be your revolution. And that's what most GCCs have done. So I think that's why GCCs will accelerate this kind of a digitization, innovation drive in banks, because the people here will lead the charge.
Very interesting.
Can I add?
Pankaj, yeah, please.
I was getting very tempted because, for a long period of time, I served GCCs from Wipro. And, we used to call them as GICs, Global In-Source Centers. And that I became innovation very soon. If you look at retail, Tesco, if you look at high-tech, Cisco, Intel, 80% of their innovation today happens out of India. Global products getting rolled off India. And I think banks, the only enabler possibly, everything is there, the ecosystem is there. If banks take a call of seeding compliance officers into their GCCs, this will become a revolution.
Fascinating. Actually, you've given me a very important cue to go to my next panelist. Well, Ganesan, I think we have two other panel members. One who is actually a Australian banker running a GCC shop. The second is someone who claimed he used to be with the GCC and now with a regular bank. But you have the distinction of actually being as part of a GCC from a GCC bank. So, and the question is obviously driving it from a compliance standpoint, and you obviously you have been looking after risk, and that's been an area that you've been focusing on. So I have actually two questions, and one is taking from what Pankaj just made a reference to, right? I mean, if you had to plug in compliance into the GCC ecosystem, you actually have a solution that could actually be far more, let's say you got it right at first time, RFT as they say it, and that's where he's heading with this. But I also want to elaborate, you to elaborate on, when we take AI and innovation as a theme, and going back to the statement that Pankaj earlier made that, FinTechs look at customers when they solve a problem or propose a solution, whereas a banker always is conscious about compliance first. How do you see, that conundrum between compliance and customer focus as innovation and AI becomes interstage?
Yeah, so thanks, Ram, for having me here. So it's an interesting question, and regulators across the world operate in a different environment and way, and the way the fintechs and banking system is going, you're going through a cycle of innovation. You can't say that I will still have my traditional old system and business processes, and I'll not change, right? So right now, if you've seen, I've been fortunate to work with more than 40 regulators across the world.
Did I get it right?
Yeah, 40, yeah. So work with them in various audit or other engagements. So most of the modern regulators, if you say people from US, UK, in Europe, or Hong Kong, Singapore, and even in the Gulf, the GCC region, the regulators have understood that it's not about the traditional banking which is going to run the future space. So you need fintechs, you need partnership, you need new business ideas. And the way the emerging technology is sweeping us is like enormous. Like, for example, nowadays we don't even talk about cloud. Cloud is an old concept now, right? Like, you talk about Gen AI, you talk about data, you talk about analytics. So the emerging technology, blockchain was a big thing 3 years back. So the regulators also started to feel the pinch that these emerging technologies have to be considered. So what regulators are doing is they are trying to partner with the fintech ecosystem. Whether you go to Dubai or go to Shanghai or Hong Kong or Singapore, you have a kind of a ecosystem where regulators allow the fintechs and bank to collaborate and do the proof of concept, right? So they set up this, and they set up the Zoom, and what they try to do is like they say that this is your seeding ground. You can play around it as a sandbox. So in Singapore, they properly call it as a sandbox, right? So the point here is in this sandbox, from a technology and a risk standpoint, these emerging technologies also bring up a lot of risk. So we understand these are fascinating stuff, but it brings up a risk. So that risk and what should be the compliance and the governance around it is a big question. That is what the regulators are coming up. And most of the modern regulators have even got policies or standards around using AI, cloud computing, blockchain, and everything. So what banks are trying to look into it is like how we can implement those policies and controls. So, for example, if you're a bank or a fintech, do you have a policy on AI, how to use AI? Right? And AI brings up with a lot of risk, which we can discuss earlier. But from a governance standpoint, how these technologies will kind of help us to innovate in a way that provide a safe banking service to the customers. End of the day, we are delivering services, products and services to the customer, and it all involves about an operational, reputational risk and an information security risk. And again, some of the countries have got more stringent laws also. Data privacy is another dimension. So, Ram, it's a kind of a balancing act. So we have regulators coming up and setting up these sandboxes. A lot of banks are contributing, even the banks which I have worked in the past and currently, we are contributing to it. And we are trying to ensure that when FinTechs gives us a solution, as rightly said, we are also trying to do a proper risk assessment around these regulatory guidelines and stuff, whether it fits the bill, right? Because if the FinTechs start from a problem, customer problem perspective and a product mindset. For them, what happens is after they build the product and everything, it becomes very difficult to plug in the security. That is the biggest challenge, and they try to kind of circumvent how we can do it. But as a bank, sometimes you have to put your foot down and say, sorry, this is more than my risk appetite, right? So that's an interesting conversation we are having. We can't block them with a red flag always, but we try to do a balancing act.
But what point does security become a part of the narrative? You start with security first when you talk to a fintech, or is it actually the last piece that gets added to the puzzle?
No. Ideally, that should not be the case. It should not be the last puzzle. But what happens is, right now, even when the business is trying to get into an engagement, what I have seen banks in my experience, when they want to evaluate a fintech partner or a solution from them, the first thing is they take the technology and the security team, the information security team along with them. So when they are proposing the product from the initial stage itself, we look into how the product is coming up and how it is linked to the ecosystem. What are our liabilities with respect to the regulators? So all those different aspects. So doing this risk assessment itself is a kind of I wouldn't say it's a challenge, but it is an important activity to be done. And in end of the day, what happens is when the bank is going to take a final decision, are we going with this engagement or going to stop this engagement? This is one of the definitely a deal breaker. Sometimes if it is so bad, it becomes a problem. If it is manageable and we can put some extra controls and stuff like that, yeah, it goes in. But it is one of the important deal breaker things.
And you're saying these are based on formalized policy that gets defined as part of the governance.
Exactly. So by the governance by the bank and the guidelines issued by the regulators, all those things come into play. Right? And again, what is the other problem? What we are seeing is fintechs, they hire people with good business acumen and knowledge. They hire great developers. But unfortunately, sometimes they don't hire great security guys because for them, security is kind of a add-on stuff. Yeah, but so that's the reason why sometimes they get it wrong. Yeah.
You gave it away. Yeah. Security is add-on. I think that was what I was waiting for you to say. But I think that's a very important statement. I think a very important takeaway also for our audience today, right? As we go through the innovation, the next wave, and as the regulators are becoming far more active and far more participative, the need for actually plugging in compliance and security in the journey of innovation and the evolution becomes almost like an imperative. So I mean, that's probably a key takeaway. So I'm going to go to the second round of this panel, a little more exciting. For those of you who are still busy with your phones, maybe we'll actually get a little more excitement with the panel here. I'm going to ask the same question to all three panelists, okay? And this is a little bit of crystal gazing, and you could actually pretty much figure how much of what they say is resonating with what you would have thought. And this question is something that you could think and see. Let's see what our panelists have to say as well. So the question goes as this, and I'll start with you, Venki. The same question to the other two panelists. You get the benefit of most thinking time. Let's assume that you actually are given a crystal ball, and you have to tell us what's the one most impactful innovation that the banking industry is likely to experience that is powered by AI. What would that be?
I mean, what I'm going to say is going to be hardly innovative, but it's the most pragmatic thing I, as a banker, believe. And we have been sort of experimenting this in ANZ, right? How many of you have seen responses and product brochures of large core banking solutions ever? I'm sure all of you have, right? It'll say, we do 4i checks, we do 6i checks, right? Because that's what banks demand. To us, and we are sort of moving very fast in this. I think the biggest innovation that can make a significant change to the bank and which can bring the dream that I as a GCC manager has, which is 80% of my staff should be focusing on exceptional transaction management and customer service. 20% of our time should be spent on transaction process. What will deliver that to my mind is if I can eliminate either the maker or the checker or the sixth eye, that sixth set of eye that goes, I think that will be a big revolution. And that's where AI and Gen AI can play a very, very large part. So it's a very boring piece of banking. So those who were moving away from the phone, please go back to your phone. But I think it's a boring part of banking, but that's the one that's going to make a significant impact. Because the moment you release all this 60% of the people who are checking and rechecking and doing control testing and quality audits, etc., if you remove that, your customer engagement ability just shoots up.
So if I excuse the grammar, AI can eliminate 6 eyes.
Absolutely.
Yeah.
Absolutely. So if we can do that, and we are sort of working very hard to get that. So that's one. The second piece is drawing on Pankaj's point about compliance, right? If we can get AI to, because the scams and scamsters are only going to increase, right? Frauds are only going to increase. So if we can get AI to help, and I saw that in your slide as well, you know, that whole area of fraud prevention, fraud management, or just picking things up early, I think that will revolutionize banking to a very large extent.
I totally agree with that. Thank you, Venki. Pankaj?
I'll try to give a, when I joined the banking industry, I used to say, banking is serious business, bankers need not be serious. we need to be...
You heard that, bankers? You heard that, right? Bankers need not be serious. So if anyone is serious, then you have a, yeah.
But anyway, so on a non-serious note, GPT AI has woken up everybody. But you know who monetized this the first in India? Any guesses?
Who monetized GPT AI
in the
first
biggest
in
way
India?
possible?
Come on, guys.
GPT AI. Genuine pure tea, adrak elaichi.
Oh, lovely.
So that is the guy who monetized this, right? And I would say AI has huge potential, whether LLM, whether generative, whether AI. Finally, it is not about one piece. It is about using it in the back office, in the mid office, in the front office, in the entire customer lifecycle journey, and seeing how do you finally drive better customer satisfaction and how do you drive better profit outcomes. For example, in our bank, we are chartered to deliver close to 20% of our operating profits this year, just from all the initiatives we are doing around, I won't call it AI per se, but around analytics, of which nearly 50% is getting driven through either a Gen AI or a LLM, etc., across the back office, front office, middle office. And the success is about delivering that 15% to 20% growth in, not growth, but the, if we, let's say, grow our operating profit by around 30 or 40% and reach a X number, around 20% is expected to be getting contributed from this entire analytics intervention. So that's what is exciting for us.
So you see,
and it touches everything. It touches.
If I see your perspective, it is actually not AI here or AI there, but you see AI through the whole value chain, from the front to the middle and the back, being embedded across the value chain.
And banks have been doing this. He talked about fraud. The banks have been running transaction monitoring systems, ALM systems on AI. Banks have been running their security. Today, security happens, there's back office AI. Banks have been running biometrics on AI. Biometrics runs on AI, right? Thumbprint, it's all, in some way or other, it's all AI. Name match, fuzzy logics. These are all AI which banks have been using for a long time, right? Now it is moving to the front office where, we are, for example, trying to figure out how do you do PD discussions instead of a field agent. How can a discussion happen with a bot which picks up facial expressions and figures out whether there's a fraudulent intent, etc., etc. Now, these are some certain things which are work in progress, and when you do propensity modeling to increase, increase your wallet share with customers, that's AI. When you do today risk, the entire digital lending we're talking about FinTech, when you do this risk modeling, that's AI. When you do monitoring, early warning signals, that's AI. So it's all end to end, it's AI. Right? How do you leverage, where do you leverage, whether you just go for fashion or you really kind of drive outcomes is where, I think
I think the only place where you would not concede it as AI is where it is natural stupidity. Everywhere else it's artificial intelligence. Yeah. Excellent. Okay. To you, Ganesh.
I think Pankaj stole most of my words. So end of the day, I'll just try to link it, right? Any kind of a technology which is coming up, end of the day, we have to believe in on the business objective. Any organization is running with a business objective. So for the banks, I firmly believe that the business objective is to provide superior client and customer experience. This is one of the biggest objective. And second thing, what I can say is maximizing the shareholders' value, right? The shareholders of the bank, right? So to achieve these two objectives, how AI can help you? Maybe I'll bring that dimension in, right? So as Pankaj said, front office, middle office, and back office, you already have AI. The customer experience comes in the front office. So all the chatbots, the conversational AI, what has been deployed. I think maybe in a year or two you will see that very more because it's almost in its maturity stage where a lot of banks have already started to deploy. So from the front office perspective, how do you do that? That is one thing. And second thing, using data, how do you do a data monetization, right? Cross-selling, giving the right feedback or giving the right leads to the RMs, the relationship managers, to sell the right products, whether it is in retail or in corporate banking. So that is a big thing. And then we spoke more about the risk system, fraud prevention, detection, so much of models and stuff like that coming up, right? So that is another area which corely lay on it. And the third one is like again, a kind of a biggest back office is around the legal and compliance, contracts. Now these AIs are trained to read the contractual documentation. For example, I want to identify a contract risk. I have to put a legal person, and then he will take his time and to read it and say this might be 3 or 4 things. But now I was fascinated to see a solution where I give 100 contracts and I give 5 risk dimensions. It is able to throw it to me in another 3-4 minutes. It's amazing, right? So that is the power. So what we need to do is, like, end of the day, again, this AI also involves a lot of investment and money, right? So how do we bring the right use case, and how do we link it to the business objectives? And of course, very important, banking is a regulatory business. So whatever we are putting it, we have to do a proper risk assessment. Who's training the model? And tomorrow, if AI can go rogue, and there is no kind of a check on the integrity of the AI, and if there is a biasing, and you would be not providing loans to one particular segment. Who is checking that one fine day after a long period an auditor can come and pick it up? So it's very important. So business objective, how we can deploy the use cases, how we can take the right risk, all these things is what I would say.
So Ram, if I can elaborate on, so I was in a similar panel some time ago, and on the risk element of what Ganesh was talking about. So there was a law firm, and that partner was telling us about their experience with using Gen AI. So they had a case and they were looking for, law is all about precedents, right? So they look for precedent cases. And Gen AI gave them 8 cases of saying so-and-so Madras High Court, so-and-so Uttar Pradesh High Court. All of them were fakes. It was inventing its own stuff. Now, imagine that happening in a bank, right? It can be quite a crazy situation. So that risk element is important. I just want to make one more point on this. Yesterday, again, I was talking to another peer bank, a mega sort of bank, which is investing billions of dollars in this. The interesting part was, so efficiency, productivity, all that is one aside. Their focus now is how to bring in additional customer revenue using AI. So they want to use Gen AI. All that is, done. Maker, checker, hata diya, do better with less people, etc., etc. But the big thing that they are focusing on is how to get increased customer revenue. And he threw a number. They run a $2 trillion FUM asset management business. You probably know which bank I'm talking about. They want to use AI in the next 6 months to increase that by $250 to $300 billion. Yeah, so that's a significant number.
Huge. But really, AI going rogue is the one big takeaway for me from this panel. Yeah. Yeah. Thank you, Ganesan. For you,
Sorry for scaring.
Yeah. I
It is
gave
not
him
to
the
scare
crystal
people,
and look at what he is gazing. Yeah. He is gazing AI going rogue. Yeah. Pankaj, you want to say something?
So only thing I will say is, again, we have to keep it simple. We know the downsides of AI, and like he said, what we are doing in the bank is things which have been established. So transaction monitoring. How do you use is what is more important rather than becoming very ambitious. For example, we are right now very uncomfortable for a direct interaction of AI with customers or putting it in the core, right? But looking at a propensity score and trying to reach a customer for revenue growth is okay. Making it work where it is proven to have worked is okay. So I think we will be leveraging AI, Gen AI. We have been leveraging, but either we'll do it in small pockets before you really make it big, or we'll look at some tenor. Bankers will always lend kar diya abhi tenor. We'll look at what's happening in the market. We'll feel comfortable and then really productionize some of these things of future.
I think the point what Pankaj makes a sense, because you look into the smaller pockets which are less riskier, and again the way to leverage AI is two things, right? One is if you have your own capability of developers and testers who can create this language models or train this language model, that is one thing. Other thing is like the AI market is so open that you get a lot of boxes or off-the-shelf product and you bring it in. But that off-the-shelf product, how it is made, how it is trained, what is the genuinity, what is the trust score, and all those things is very, very important. So yeah, end of the day, I think we cannot stop it. In the next 2 years, we will see a huge transformation where this will come in. But what business process is coming up, how it is going to transform it. And again, all these things also can turn into a digital worker. The RPA one which you told about, it was like really amazing. So every bank started to have digital. I've seen banks having more than 300, 400 digital workers. The digital workers perform a very important critical back-end operations job, right? And how the digital workers work and how it, and again, this is also very amazing, like how AI can monitor those digital workers. That is also a use case going on. So we see in pockets.
AI will monitor AI.
AI will monitor AI, right? So that can also happen. The thing is like, so on that particular note, I think we cannot stop this phenomenon coming in. But the thing is like, pick up the right use cases, pick up the right models, and ensure that you know what is your risk appetite, you know what is your regulatory guidelines. Whether it is following it or not, it's all basic sense where we take a risk, calculated risk, or we say that, yeah, it meets all the requirement, and then we deploy. And again, if something happens bad, what is your business continuity plan? That is also very, very important. How do you recover quickly, or what can happen? Because what happens is, after the math of the incident, only everything comes in. Then we find out where is the problem, where is the root cause. So it's a typical thing. So nothing to kind of worry much, but the thing is like, let's use the common sense and ensure that we train this AI or use this AI in small risk areas, and then slowly propagate how it can give a value add to the business. That is very important.
I have another 3 minutes, so I will open up to the audience to ask any questions there. Yes, can I have someone hand the mic there, please?
Hi everyone, this is Ashwini Purohit from HSBC. My question is more around how regulators think through, across different markets, different countries. The backdrop to this question is, I was working on a conversational AI journey, and where we were having discussions with the data security team, with the GDPR, how we can circumvent around GDPR, or what are the aspects in displaying what is it that the minimum amount of data that we could do it to the customer, considering the data privacy aspects. And while these discussions are in progress, I just go on to my bank here for a question, and I see the same journey with the complete information there. So definitely there is a change, or there is a difference in the way regulators' mindset works across countries. So I'd just like to understand what are your thoughts on that.
Want to take that, Ganesh?
Yeah. See, I think regulators are maturing enough. End of the day, you have to also understand regulators also kind of an organization where old people come in, old people go out, new people come in. So the mindset is slowly changing up. So what regulators are currently doing is like they are creating a kind of a guidelines how to use this AI technology. For example, if you're talking about HSBC, your major thing is Hong Kong Monetary Authority or Monetary Authority of Singapore, say. So they already have these kind of sandboxes. They already have a guidelines and a policy. Now, the next step, what we have to do is any proposition you are giving from the bank, you have to see whether all these, the guidelines are being met by the current solution, what you have. Whether you have developed on your own or with your vendor partner, do an assessment. And again, data is the important thing, the data privacy impact assessment and the way, how do you, where do you store the data, where do you process the data, who has got access to the data. So all these things you have to do a proper due diligence and a risk assessment before you ensure that you kind of go live. And even some of the regulators also say that if you are adopting these technology, when you are ready with everything, please send me a letter, I'll give you an approval and then you can go with it. So that is also something. Say for example, when we were transitioning to cloud, right, like before 5 years, when we were transitioning to the cloud, every regulator said, okay, you have to do the due diligence, submit all your risk assessment due diligence paper, send it to me for approval, I'll review it and approve. Same thing, it can happen here as well. So a little bit be collaborative with the regulator and whatever guidelines they are following, please do it. So this is a very high level answer. The detailed level answer can be given by consultants. There is a big group around there.
Thank you for promoting us.
Thank you.
Any other questions, please? Yes, Karthik.
Thanks. Hi, Karthik from ANZ. So this is another crystal ball question. So listening to you, obviously, as we are seeing risk assessments and customer assessment changing a lot with ESG, when you look forward with, say, a future state where AI is, all companies are more AI native, banks are AI native, are you also going to, are you also predicting a change to your customer composition and how you want to pre-evaluate, like Sam Altman is talking about $1 billion, rather $1 billion unicorns being a single person. You don't have to have a big company powered by AI. So are you also foreseeing customers assessment, risk assessment through this? And how do you want to, how are you preparing as banks? And that's probably a question for you, Pankaj, and maybe others can touch it.
So, I didn't get the question fully, but if you're saying that is AI going to change the composition of the customers? My answer is,
because some customers might go out of business because you would have automated their jobs or their industries.
Okay, so you're basically saying is AI going to take out jobs and then hence the, so anyway, let me give you two answers what I thought was your question. I think, technology, whether it is AI, whether it's been evolving, right? And with every evolution, there is a change. The society, the dynamics, the ecosystem will change. So it will be wrong to assume that what you see today will remain. And is that a function of AI? Probably yes, probably no. Maybe AI will accelerate the change a little bit. I keep saying, it's a very interesting thing. There's a concept called BIG, B-I-G-G, right? And we keep saying big is nothing but Bedrock, Gemini, GPT. These are the three key guys. But what is I? From the company standpoint, it is intelligence. But from a user standpoint, I would say humans have to now deploy more intellectualism to use intelligence sharply. So machines will still not be intellectuals. Machine will bring artificial intelligence. And humans with their intellectualism have the responsibility to drive it in a particular fashion. Today, digital lending and all, there is AI. I think mention happened in saying how underwriting happens. And, there could be situations where suddenly you find a sector of customers not kind of getting lending and you suddenly lost it and regulator comes and says, you're not doing this, you're not doing that. Could be situations, but which is where active monitoring, active risk controls will kind of bring it back. Even if these are manual processes in the bank, if we have active risk controls going, active monitoring going, you will quickly realize something is going wrong and you will course correct before the regulator kind of catches you. So it's
embedding compliance and regulation into the whole process, as was spoken earlier, seems to be becoming more and more, let's say, imperative from what I'm hearing. Yes.
So, will customer profiles, customer segmentation approach that banks adopt change? I think it will change. 100% it will change. Because banks look for prudent customers. Banks look for safe customers, right? So if you see a customer who is able to lever data better, who's able to manage their customer segmentation better, banks would naturally gravitate towards that. The good news is, for every bank which is going to do a lending business, and in this example, there are several others who are going to come in disintermediate banks as well. So there will be a lot of suppliers as well as a lot of requirement that will come through. You will have, as a bank, you will have enough to make choices. So absolutely customer profile and what we would look for as ANZ or as HSBC would definitely change, and it will be driven largely by how well is a customer leveraging data, how well is the customer's information available to you, right? Today, you pass a credit memorandum based on the balance sheet that the company provides. Tomorrow, you can leverage the data that is available at very granular level to do a much better balance sheet analysis for them.
So, and one more thing, when you deploy that AI solution also for the lending, right? End of the day, the business guy needs to give a user acceptance sign off. So he will look into the patterns, he will look into how it has been trained. So you can't separate one group of customer segments. So what AI will do is AI will look for the data quality, right? So sometimes what happens, data quality is a big problem in all the banks, right? Like all in the FinTechs as well. So based on the data quality and a kind of a discretion, the relationship manager or the sales guy will segment it in a different way. But again, when you put AI also, it will be trained, but there will be questions asked. What is the logic? Why without these parameters you are segmenting it? So it's a natural progression when you even deploy this product and go live. These checks and balances will take care. If something is grossly wrong, then the business guy will say, it's wrong with your solution, technology, this is really bullshit, what are you doing? So there is a natural checks and balances. It can't completely go
You
away.
heard that before,
Yeah.
haven't you?
But the good news is it will change, but it will change in a very inclusive way. Yeah. What is going to happen is today, without AI, banks engage with customers which are a very good customer with data, with statements. But now the inclusion will become, so there will be a huge segment of customers who will start banking, start getting lending. So it is good news. It will become much more inclusive, and from that standpoint, probably the composition will change.
I think, I'll probably also give my take on this, and we'll probably close this panel. The data-driven, AI-driven banking is actually, in my view, not shifting customer bases, but actually is expanding the customer base. There's a big difference there, right? So if you see, just for example, we were having Suhail Sameer, the CEO of Bharat Pay, one of the panels earlier, last year. And he was explaining how, the concept of actually micro-lending to these cart vendors, which is a hitherto non-existent, market, is now happening because you have data that tells you how much that person is earning every day, every week, every month, which is resulting in my ability to actually then do underwriting, and which is now creating, and the estimated value of that market is anywhere between $500 billion to $1 trillion just in India. So you see the size of what is happening. So clearly there is a new segment that's coming up. I've been given some very, very funny faces and signals from my team that I need to close this panel discussion. Sorry, ladies and gentlemen. But I have to give it to you that when we won, I think nobody has fallen asleep. There were some very intelligent questions. Wouldn't you agree, Venki?
Absolutely.
Yeah, the chef. Sorry, guys. So with that, I would draw closure to this panel. Once again, many thanks to Venki, Pankaj, and Ganeshan. And it was a very interesting, engaging conversation. Thank you.